Sunday afternoon or Sunday evening. Welcome, everybody. I hope you guys are enjoying your Sunday. I know I am. It's been a good, relaxed, full day. I've been going to church, watching the news, and seeing all the latest news that's coming out on crypto. It's been a flood of it today. I am not going to be able to cover all of it, but there are a couple of ones that stand out that we will cover. And I apologize for the typo. My phone did an autocorrect and I didn't see it in time, so I'll have to re-edit that subject line afterwards. But it is the Winklevoss twins become the world's first Bitcoin millionaires. And that's a huge step, a huge thing. So yeah, why won't it let me edit that? So oh well, I think it has to wait till I'm finished so I can go ahead and edit that. But I hope you guys are enjoying your day, getting ready for the new week. We're now on the countdown till the end of the year and getting ready for 2018 and the countdown to the end of this fourth quarter. A lot of things is happening in crypto world in every sector. Tonight we're gonna begin with let's see, what fun news. Basic news this week in Bitcoin. Big bangs, huge swings, and a word from the White House. You know, a lot of news has been coming from America this past week, and that's what I've been waiting for. Waiting for the Americans, us, our governments to say something. Unfortunately, it hasn't been on the positive side of things, and we expected that. That was to be expected. But they're finally talking about it. I think they're a little behind on the 8 ball on this. They're going to try to put the genie back in the bottle, and they're not going to be able to. But they also haven't been stupid. They've been monitoring this from the beginning, and they've been preparing. I will say that, you know, our government, we're not stupid. So let's go over some of the news from this week. Now, every week we tell ourselves this one's got to be quieter. I say that every day. I wake up thinking, now we couldn't have any new news that topped what happened yesterday or last week. And every day I'm proven wrong. Every day. That's why I do 2 Facebook Live crypto talks a day now. Because 1 isn't even enough. That's how fast things are moving. So every week we tell ourselves this one's got to be quieter. And yet every week we're proven wrong. Welcome to the latest and craziest edition of This Week in Bitcoin. We've no idea where this madness is going to end. All we know is that there's no time to assess the situation. There's too much stuff happening in Bitcoin. For those of you who were forced to sleep at some stage this week, here's a roundup of what you may have missed. Bitcoin goes bang. We tried to teach you about ways in which Bitcoin is changing the world. We tried to inform you of cryptocurrency regulation in developing countries. We even tried to impart cautionary advice regarding margin trading. But all you wanted to hear about was Bitcoin appearing on the Big Bang Theory. Well, we said, Bitcoin has been featured on many television broadcasts over the years. This includes shows like The Good Wife, Mr. Robot, The Simpsons, and even on Jeopardy! The Big Bang Theory's upcoming show was also filmed a while back when Bitcoin was averaging $5,000 per BTC. But this week's Big Bang Theory episode is sure to bring more attention towards the Internet of Money alongside a touch of laughter. All of this week's most popular stories were of the lowbrow variety, but that's okay. Amidst all the heart-pounding drama of watching the ticker hit 11,300, shed $2,000, and then rise again like a phoenix from the flames, some respite was needed. You got all that in our tale of a man who lost 1,000 bitcoins thanks to a faulty thumb drive. As the unfortunate Australian put it, if my wife knows, I'm dead. Other click-friendly stories included the world's worst named cryptocurrencies. We said classics that are dead in the water include FCK Banks coin, Fellatio coin. There was a Fellatio coin. Groin coin, and Crimson coin, whose devs sold their coins and ran off in less than a week. No prizes for guessing what happened to Dodo Coin. And now for some real news. By midweek, the Bitcoin roller coaster was making everyone giddy and causing overloaded exchanges to tap out. There were more memes, media headlines, and sound bites than we could keep up with. Even though we tried to summate the best in our piece on Bitcoin going parabolic, we said, the only way to find out whether this rocket is filled with paper straws or moon fuel is to keep going. One thing's for sure. Up this high in the atmosphere, things start to get scary. It's a long way down. So welcome to the School of Bitcoin. With all the new money and newcomers pouring into cryptocurrency, we decided it was time to dispense a few elementary lessons, including one on calculating transaction fees, and another on how to safely store your Bitcoin and stay safe by keeping your Bitcoin business to yourself. We urged, leaving your private information out in the open or bragging about your Bitcoin holdings on social media is not the greatest idea because thieves and even jealous friends can become very real. For an intangible digital currency, Bitcoin sure stirs up strong emotions. From elation to anger and greed to disgust. We did our best to capture the best and worst elements of the sector as we cover stories as the IRS receiving the data of 14,000 Coinbase users and Bitcoin hitting new highs in Zimbabwe. We said, after years of theory and debate, the decentralized currency has its real-time case study as a refuge for those seeking to store their wealth in a medium that will hold its value or better. In a week where politicians correlated Bitcoin with getting kids hooked on drugs and Turkey deemed the currency un-Islamic, it really was a jam-packed 7 days. Oh, and we haven't even mentioned Bitcoin futures, which are totes coming. Like for real this time, December 18th. This week's required reading from elsewhere on the web, incidentally, is The 3 Economic Eras of Bitcoin by Rusty Russell. Huh? I haven't heard of that one. The 3 Economic Eras of Bitcoin. I want to save this. Opening a new tab. I want to save that one. By Rusty Russell, and an excellent piece on Bitcoin's true value by Miguel Cuneta. The week ended with more drama as we revealed that proposed U.S. legislation, of course, may criminalize people who conceal Bitcoin. I'm going to read that one soon. Y'all had a lot to say about that one in the comments. Turns out you're not big on Dianne Feinstein. Eric Wall also returned to deliver his second trading column, in which he pondered whether now's a good time to buy Bitcoin. Could next week's roundup surpass the giddiness and drama of this one? You wouldn't want to bet against it. See you next week for more all-time highs, possibly, bankers saying dumb stuff, certainly, and crazy tales from the bizarre world of Bitcoin. I like that article. So I think Bitcoin.com news, they're going to probably do a weekly roundup every week. So I'll make sure I keep an eye out on that one because I don't read every single article. So there might be some things that I miss. So let's go on to something else. Let's see. I want to talk about the Winklevoss twins. Those of you who don't know the history, if you go back and watch that movie about how Facebook got founded, the Winklevoss twins were the originators actually of the idea and the programming behind it. And when Mark Zuckerberg saw what they were doing, he added his idea onto their programming and basically stole the show. And he sued them. I think, you guys can correct me if I'm wrong, I think they got maybe $50 or $60 million in the settlement when he sued them. That's not bad, but considering billions of dollars, that's a huge hit. But could anybody doubt that one day those guys would become billionaires? I never doubted that. So the day is today. Winklevoss twins become world's first Bitcoin billionaires. Let me put the link of this article in the chat box for you. These are exciting times to live in, guys. I said it on my Facebook Live yesterday morning. Very exciting times. Movies and documentaries will be written about this time right now, and we're living it. Question for you is, are you a witness or are you a participant? All right, Winklevoss twins. It's been a funny old year for Bitcoin, the digital currency or cryptocurrency, as it's sometimes known, that uses pretty impressive encryption techniques to verify the transfer of funds. After lying almost worthless for years and years, it blasted through to $11,395 per coin. Well, that's 8,000 pounds. Recently to hit a record high. Former JP Morgan equity strategist Tom Lee even claimed that Bitcoin's value will soar to $25,000 per unit within 5 years. With all this hype, there have been some haters, with some warning about its threat to financial stability and potential for criminal exploitation. They always want to throw crime in there. But it's been very good news for Tyler and Cameron Winklevoss. Yep, those ones who sued Mark Zuckerberg, claiming he stole their idea of Facebook. The ones played by Armie Hammer in the social network. And the ones who do all the rowing, having just become the world's first Bitcoin billionaires. The twins who attended Harvard University with Facebook founder Mark Zuckerberg made a $11 million bet on Bitcoin over 4 years ago. Think about this, guys. Some of you are just now hearing about Bitcoin. You got to follow the money. The movers and shakers have been on this years ago. So they made an $11 billion bet 4 years ago, which ballooned over 10,000% after last week's price surge. It's said to be the first billion-dollar return made by a cryptocurrency investor, marking a huge landmark for the controversial asset. Its recent rise has made many people very rich, even making millionaires out of some of its early backers. Though Tyler and Cameron can claim that they've been made the richest, which isn't a bad brag to have to your name. However, the Winklevoss twins aren't the only savvy fellas to have capitalized on the rise in the value of Bitcoin. One 18-year-old student, Eric Finman, suddenly found himself worth a massive $1 million thanks to the Bitcoin business, having invested in the coins that just 7 years ago were practically not even worth the S on your shoe. You know what I mean? I promise I would attempt to refrain from using profanity. So you know what that means. It all began when the school dropout, he quit when he was 15 years old, received a $1,000 gift from his grandmother, which he spent on Bitcoin. He sold that 2 years later for $100,000. Think about that. He went from 1,000 to 100,000 in 2 years. He set up an online education company called Botangle in 2015 and was offered either another $100,000 or 300 Bitcoins to sell the company. He chose Bitcoin when it was worth just $200 per coin. Congrats on all being so filthy rich, guys. You know, I always say the best time to be involved in Bitcoin was years ago. The second best time is right now. Wall Street and the heavy hitters are not in the game yet. They're already making predictions that Bitcoin might be worth $20,000 a coin by Christmas. By Christmas. Just a month and a half ago, the sucker dropped down to like $2,900. This is a sweet time to be in. All right, I'm going to have 2 more articles to cover and then we're done. People have asked if I could keep my Facebook Lives down to, 15, 20, 30 minutes or so. Because I can get long-winded talking about stuff that I like. And there's so many articles. But 2 articles I'm going to read. The first is Goldman Sachs questions all the Bitcoin haters. I definitely want to read that. And then we're going to talk about the U.S. Senate bill that wants to criminalize those of you that's concealing your Bitcoin. So let me put a link to this article here in the chat box for you. That's right, Mofus. Feeling extremely excited. I know I am. All right, Goldman Sachs questions all the Bitcoin haters. That's a first. Goldman Sachs is a bank. You'd think they'd be on the hating side. But why the switch? Because there's money to be made. There's money to be made. That's why the switch. Oh, money always talks. So let's read this article here. Bitcoin is similar to gold in a lot of different ways, and most of the volatility that it has been experiencing as of late comes down to the lack of liquidity, according to Jeff Curry, who works for Goldman Sachs Group, Inc., as the global head of commodities research. He questions why there has been so much hostility in recent times when it comes to Bitcoin while he was being interviewed by Bloomberg Television. He talked about how similar it's to gold as a result of there being no liability linked to it as opposed to a normal security. It was on November 29th that Bitcoin smashed through the $11,000 mark for the first time. Remember that date. Actually, it's really the most important day when it hit the $10,000 mark. Oh, well, it was 24 hours later. That's right. It was only 24 hours. So on November 28th, it smashed 10,000. 24 hours later, it smashed 11,000. I was asleep both times. Why did it do that? Because of Asia. When we went to sleep, Asia went to work. So this means that it has seen gains of almost 12 times over since the beginning of 2017. I want to stop right there for 1 second. All the people, all the clowns, all the misinformed people from the MLM industry, the 7-figure earners running their mouths claiming that every single MLM company in the crypto space is a scam because how in the world can you afford doing 1 to 2% payouts a daily? That sounds too unrealistic. But at the same time, you want to back Bitcoin when Bitcoin grew from $700 a year ago to almost $12,000 today. The 1 to 2% measly payout is nothing compared to what Bitcoin and the rest of the cryptocurrency industry has grown in an 11-month period. You can't compare apples to oranges if you're looking at the stock market gains compared to crypto. The volatility is huge. The growth rate is huge. Bitcoin, don't quote me on this, but I think it's doing at least almost 3% a day growth. Yeah, you're crying about a company that might be doing an average of 1%. Get out of here with that. Do some homework and research. All right, let me continue. Gold, in comparison, has seen an approximate gain of 12% this year to date. Look at that. Gold did 12%. Whereas Bitcoin did a 12 times gain, 12,000%. Now, investors largely are still very skeptical when it comes to Bitcoin. Many of the world's leading investors, such as Warren Buffett, have labeled the cryptocurrency as being a bubble, whereas others, such as the billionaire co-founder of PayPal and the first investor in Facebook, Peter Thiel, claiming that people are actually underestimating it. Can you imagine that? Think about that. See, when you listen to guys like Warren Buffett has a specific strategy when it comes to investing. He's not all over the board. He has a formula, and his formula is similar to J.P. Morgan's father. Go watch the documentary, The Men Who Built America. J.P. Morgan, even though he was an investor, was of the same mentality as a Sir Richard Branson when it comes to, new technology and stuff like Elon Musk. He was backing the invention of electricity. He was funding it. His father was completely against it because in his father's eye, it wasn't a sure bet. It was speculative. It was creating something out of nothing, which meant there was no demand for it yet. That goes completely against JP Morgan's father's investment strategy. Same with Warren Buffett. But then you look at people like Peter Thiel or Bill Gates or Steve Wozniak or Sir Richard Branson or Mark Cuban or John McAfee. These guys have created something out of nothing. They didn't get wealthy just by investing. They created companies. They're entrepreneurs. They have vision and foresight. They look at what problems are in the world and find a solution for it. They're visionaries. Those are the type of people who are saying we are underestimating Bitcoin. Why? Because they understand that blockchain technology in the cryptocurrency space is the greatest invention to mankind since agriculture. It is the greatest economic shift in wealth in human history for the most amount of people. They already see this. Warren Buffett can't see this. So always know when you see somebody that's for or against this space, always find out and look at what their agenda is. What is their motivating factor? What field of study or field of money are they in? And you'll understand why they say the things they say, so you won't be upset about it. Everybody has an agenda. All right, I went off on a tangent there. Let me keep going. Some people are even claiming that the reason for the massive price surges in Bitcoin is down to the fact that there is currently little to no oversight, which has allowed price levels to get out of control. Why does it have to be controlled? I thought the entire free market system was about, free market. It's whatever the supply and demand of the market is. But no, the governments and the banks want to control it. Curry claims that the majority of people trading Bitcoin do not believe there is a link with gold. Currently, there is over $8.3 trillion worth of gold that has been mined, and it is currently above ground, which means that a lot of liquidity exists in the market. Central banks also have a large amount of control over gold and its supply, which means that it cannot be a full substitute between gold and Bitcoin. Despite many warnings about Bitcoin being a bubble, the cryptocurrency continues to hit new highs. Yeah, that's one thing about a bubble. When you talk about a bubble and it pops, it doesn't refill itself. It's done. Yet every time Bitcoin rises and then has a market correction, the haters call it a crash and they say the bubble has popped. Yet it comes right back bigger than before. How'd the bubble fill itself back up again? They were calling it a bubble when it was $8 per coin. They're going to call it a bubble when it's $50,000 per coin. They're going to call it a bubble when it's $100,000 per coin. Even Jamie Dimon, CEO of JP Morgan, he admitted that he believes Bitcoin will go up to $100,000 per coin. Whether he slipped in saying it because he had to remember, oh yeah, I'm supposed to be hating on Bitcoin right now, but he said it. Don't be fooled by what Jamie Dimon says publicly. Behind the scenes, he's going to make another billion off of Bitcoin. Oh, a new article just popped up in front of me. The writing on the wall. What will CME Bitcoin futures do to the price? I'll have to save that one for tomorrow morning. All right. They are trying. Despite many warnings that Bitcoin being a bubble, the cryptocurrency continues to hit new highs. Even the general public who have little to no background when it comes to making investments have been hearing stories about Bitcoin holders becoming millionaires in a short space of time and are trying to hop on the bandwagon. That's the one problem I have with Bitcoin and cryptocurrency space. Even when it comes to programs in the cryptocurrency space, because you're investing. The problem I have is not with Bitcoin and its rise, is that you have people that are not qualified to be in this space entering this space. And they are not adequately prepared to handle not only the windfall, but they're not prepared to handle the losses. There's a reason why 70% of lottery winners go broke within 10 years. They never learned the skill necessary to earn that amount of money, and they definitely didn't have the skill set on how to keep it. There's a reason why most professional athletes go broke within 3 to 5 years after they leave the league. They made all of their money by doing a skill, and the skill is a limited skill. The skill has a shelf life based on what your body is able to endure. And once your body cannot do that anymore, they lost the skill set, which meant they lost their check. Yet they continue to live the lifestyle as if that type of money is going to continue to come in. You have a bunch of people who can't afford to be in the stock market because you need at least $250,000 to $1 million to play the game. So you're locked out of that game. Now you can have $5 and enter Bitcoin. And now you can think you're an investor. You think you're in the game. And the moment you lose, you're going to be screaming bloody murder and call everything a scam because you got emotion in it. You have the most to lose. If you cannot afford to lose money, you should not be in this game at all. Unfortunately, that's not the case for Bitcoin. It's allowing it's a double-edged sword. It's allowing everybody the opportunity to get in. I guess that's a good thing. But there's also a negative side to that. And that's my biggest concern when it comes to this space and the programs in this space. All right, so let me continue to read. They are trying to get their money invested, which is never... Uh-oh, my computer just did something silly. Hold on. All right, they are trying to get their money invested, which is never a good sign when people are reacting to the hype surrounding a given investment. Curry concluded his interview by saying that the volatility Bitcoin has been experiencing is due to the lack of liquidity that is currently in the market. When you compare the liquidity and the market size of Bitcoin with gold, you quickly come to realize how gold can never come close to having a similar sort of volatility as the cryptocurrency. Bitcoin, in theory, fits a lot of the same molds as other commodities, but the difference and standout feature are in the blockchain and the ledger, not specifically in Bitcoin itself. And you know, the haters know this. That's why they are attempting to separate Bitcoin from blockchain. Like Jamie Dimon. Oh, we believe in blockchain technology, we just don't believe in Bitcoin. How can you believe in one without the other? Bitcoin is a result of the blockchain. Bitcoin is a reward for miners creating the blockchain. You can't separate it. What he's really trying to say is we love the technology, but we don't like Bitcoin because we can't control it. It's decentralized. If we can use this technology and create our own coin that we can control, that we have control over the mining, that is pre-mined and under our control, oh yeah, then we're all for it. What they're not for is the decentralization of it. Understand that whenever you hear them say that. All right, last article of the night, so I can satisfy those who don't like listening to me talk for a long amount of time. And I've got a Laker game to watch tonight. We're going to talk about the U.S. Senate bill. Let me put a link to this. All right, put the link to this in the chat box. You can read it, follow along with me, or just listen in. And this is huge. Before I read this, I got to say this because you guys have to understand. Look up the Satoshi Revolution. It goes over the history of money in the United States. Did you know that it was in our Constitution that each American citizen had the right to coin and mint their own coin that can compete with the government's coin? The only entities that weren't allowed to do that were the states. But individuals were able to do that. The law was changed in 1865 because the government wanted to have control. You got to understand history first. And when the government doesn't like something, there's three things that a government will do. The first thing is they will criminalize it. They will always focus on criminal activity. Think about when the prohibition, when they outlawed alcohol, criminalize it. They said all the gangsters and the drugs, they're using this alcohol and it's against our morality, it's against the Southern Bible Belt. But anyways, they criminalize it. They'll say it has to do with drugs. It has to do with terrorism. It has to do with, smoking weed and whatever. Bitcoin is only used for drugs. The second thing they'll do is attempt to ban it. Ban it. They'll throw up roadblocks. They'll have bank accounts shut down if you're using Bitcoin. They'll prevent merchants from doing any transactions in Bitcoin. They'll do everything in their power to try to hinder it. And the third thing they'll do is co-opt it, meaning they will co-opt the technology and create their own. aka the ruble coin in Russia, the Fed coin or digital coin in the United States, the CAD coin in Canada. All of the governments will have their own digitized coin. Mark my words. Those are the three things. So let's see what version the government is on now, because as John McAfee said, the genie's out of the bottle now. No, I mean, you can't shut it on now. It's out. So U.S. Senate Bill S.1241 to criminalize, there we go, criminalize concealed ownership of Bitcoin. On November 28th, see, you got to pay attention to other things going on besides Donald Trump and Michael Flynn and the Russians and North Korea. You got to watch for the little things that the Senate and Congress is doing that the news is not reporting on. That has huge effects on all of us. So on November 28th, the U.S. Senate Committee of the Judiciary held a hearing. Did you guys even know this happened? Regarding this bill that's titled Modernizing AML Laws to Combat Money Laundering and Terrorist Financing. Now by title, that sounds good, right? Yeah, we gotta stop money laundering. We gotta get those terrorists. Sounds good. Now let's finish. Despite little attention being given to digital currencies during the hearing, the bill itself would amend the definition of financial institution in the United States Code to include digital currencies and digital exchanges. See, the IRS is good for doing this. Changing the laws, and then what you were doing that was legal all this time is now illegal, and then they pull you in. The SEC is good at doing that in the MLM space. Changing the laws on you, and then wanting to try to shut you down if you don't comply. So this is what they're doing. They are amending the definition. Mark my words, the SEC is going to amend a couple of things. Is it a currency or is it a security? Well, it depends on what we want to do that day. Well, we'll call it whatever we feel like calling it. That suits our agenda. So let me finish reading. I'm getting sidetracked. This could have alarming consequences for users of cryptocurrencies both in the U.S. and abroad. The bill would amend the definition of financial institution in Section 5312A of Title 31 United States Code to include an issuer, redeemer, or cashier of prepaid access devices, digital currency, or any digital exchange or tumbler of digital currency. That sounds like a whole bunch of gobbledygook. But all you need to know is they put in there digital currency. That's the key right there. Currently, the definition of financial institution includes banks, trust companies, credit unions, currency exchanges, etc. In her introduction, freaking A, I'm in California, she's our senator, Mrs. Feinstein, Dianne Feinstein, ranking member of the Judiciary Committee, said the bill criminalizes intentionally concealing ownership or control of a bank account. Stop right there. Stop right there. You got to remember, all of these congressmen and senators, they're lawyers. They're lawyers. So they understand how to put certain words that can have double meanings in for whatever their agenda is. I took my LSAT. I was trained to become a lawyer. So I know what to look for here. So you got to look at the language here. It criminalizes intentionally concealing. So what does that mean? How can you prove that somebody is intentionally concealing ownership? You know how they can do that? Let's say for Coinbase, for example. They're going back from 2013 to 2015. On any user in Coinbase, they already know there's 14,000 of them that had more than $20,000 in transactions. Yet only 800 and something people filed for taxes that they had Bitcoin earnings. So they already know 14,000 people are breaking the law, but there was no law yet. This right here, by changing this bill, they're amending the law. So they're going to use this to go back on those same people and say, hey, we know you intentionally concealed since you have Bitcoin accounts and you didn't report it to the IRS. Therefore, you intentionally concealed it. Therefore, It's a criminal activity on something you did in 2013 when it wasn't even a law yet. You got to watch how the government acts here. Be very careful. Let me continue. Although, during the hearing, no further clarifications were given as to the effects this would have on the cryptocurrency community, based on the amended definition of financial institution, it seems clear enough that the bill would criminalize those intentionally concealing ownership or control of a digital currency or digital exchange account. That's very vague. Wow, let this sink in for a minute. The U.S. Senate is proposing a bill to make criminals out of anyone intentionally concealing ownership or control of a digital currency or digital exchange account. What's more, according to the hearing's prolonged discussion of U.S. law enforcement's handling of foreign banks and financial institutions, this bill is certain to have far-reaching effects on not only U.S. citizens, but the global community as a whole. I have a prediction to make. When this starts to come out, this is going to end up in the Supreme Court, because now we're talking about privacy. What right does the government have to know that you may have private Bitcoin accounts, wallets, since you did not pull it out and exchange it to fiat currency in the banks? What right do they have to say, you're doing criminal activity because you have a Bitcoin account and you didn't tell us about it? I don't need to tell you about it. That's my business. It's like owning property. It's not your business on what I'm doing with my property. But they're changing the rules on you. They're changing the law. Let me continue. If the above statement describes you, it is strongly recommended that you watch the hearing with this new definition of financial institution in mind. So what does that mean, financial institution? What they can say is that since, literally right now, people can live completely off the grid. Bitcoin is designed to be strictly peer-to-peer. You don't need the banks. You don't need third party. Technically, I'm not saying I am or not, because I'm being recorded and I know people may be watching me. And whatever I say can and will be used against me. So technically, I can live completely off the grid. Meaning I potentially, gotta watch my words. I potentially never have to put money in the bank. And I can still pay all of my bills, buy food and groceries, buy cars and clothes, without ever having to put money in the bank. So at the end of the year, the tax man can look at my account and be like, wait, well, hold up. You made what, $11,000 last year? What are you dirt poor? How? But we see that you have a new house, you have some cars, you have clothes, you took vacation trips. We see the transactions taking place. Where'd the money come from, bruh? And then what they're going to say is your private wallets, they're going to start to call that a bank. They're going to call that a financial institution. And you're not reporting it. They're going to change the definitions on you. So let me continue reading this. Interestingly enough, Ms. Catherine Hahn Rodriguez, a Coinbase Board of Directors member, made absolutely no mention of digital currencies or digital exchanges in her testimony, nor was she asked any questions pertaining to these topics. Conversely, in her July 2017 written testimony to the U.S. House of Representatives Committee on Financial Services and Subcommittee on Terrorism and Illicit Finance, she stated that some users of digital currencies use them to conceal and move illicit proceeds because of the perception that virtual currency is untraceable. Also, in her prior written testimony, she stated that the fintech industry could be a very helpful partner to the government in addressing national security concerns, that investigators like digital footprints, and that is exactly what digital currencies provide, and that of course we can only follow the money to an individual or group if they use a regulated exchange, one that follows basic AML KYC laws. Contrary to the bill itself, the hearing was noticeably lacking in references to cryptocurrencies, although there was some limited mention of such. Ms. Clawboucher said, "Is this transaction we're seeing from cash to digital going to make it easier or harder for law enforcement to track these money laundering cases? And you think these drug cartels are going to start going cash free? And what do you do about it?" Mr. John A. Cassara says, "Senator, I am just glad I had my career when I did, because I don't know what I'd do trying to follow the money when it comes to digital currencies. It's extremely challenging. I think if you look at the metrics suggest today that digital currencies are a small fraction of the threat that we face. That's not to say it's going to be the case in 5 to 10 years from now. We're right at a crossroads, and it's going to be very interesting to see what goes forward. Due to the probable negative implications for the global cryptocurrency community, hopefully the interpretation of this bill in this article is proven incorrect. However, at this point, it seems fairly clear, at least to me, the author, that this is the intent behind the bill. If this is indeed the case, it will be the most recent attack on a growing list of state-backed attacks against the crypto community. Furthermore, from the noticeable lack of references made to digital currencies during the hearing, it would appear this bill is yet another underhanded attempt of the U.S. government to further erode global freedoms and civil liberties, which markedly began with the introduction of the Patriot Act shortly after the 9/11 attacks. Who's against that title? It's the Patriot Act. Nah, it's Big Brother. As Tony Days mentioned, it would have been nice if Andres Antonopoulos was there to impart some of the wisdom he shared with the Canadian Senate on October 8th, 2014. Tony Days' summation said, "It's bad. I think it's going to end in a very confrontational way between Bitcoin, even Bitcoin holders and users, and the U.S. government." Jimmy Song's summation, "Yeah, the nice thing about laws is they take a long time. Indeed, it will be a very interesting to see what goes forward. If this bill passes, how many of you future criminals out there are still set on holding?" See, this is probably the most important article if you're an American citizen right now and you want to get into the Bitcoin space. Because there's many different theories, or not even theories, but different activities people are doing with their Bitcoin. Buying and holding. Buying it to not have to pay taxes. Only pulling out money that they need. No, I go on record as saying I am not a holder of Bitcoin. I don't buy Bitcoin just to sit and hold on to it. I earn Bitcoin. I don't buy it. I earn Bitcoin, and I know how to flip the Bitcoin to make me a very nice income. Very nice income. But that's my strategy. I'll have a partial and mixed strategy going into 2018. But we all have to watch for is, what is the government going to do? How are they going to hinder this? We already know they're going to criminalize it, and we're seeing how they're going to try to ban it, make you a criminal, scare you from using it, and we already know they are having the Fed coin on standby. It's coming. So with that, I think I went 45 minutes. With that, thank you guys for listening. Get yourself in the game. Don't just be a witness to history. Be a part of it, one way or another. Now it's time for my Lakers game. See you all tomorrow morning on the next Bitcoin Brandon talk. I'll be talking about JP Morgan and a couple of other articles that just popped up here. The CME and what's going to happen. So we'll see you tomorrow morning. You guys be prepared to have a great week. God bless and good night. Bitcoin Brandon out. Bye-bye. Oh, and pay your taxes.